Hello guys, I hope you're doing great. Let me thank you all for being here in this video, for choosing this video over other options you had, and thanks for the support for this channel. And let me encourage you to subscribe if you haven't done so already. Let me encourage you to subscribe, like this video, share it with some other people that might be interested in this topic, and leave me in the comments what do you think about the concepts that I've been sharing with you all in this channel, because the idea here is to bring you some topics or some concepts that you don't usually get to see in any other channels or any other academies. Okay, so the idea here is to bring some concepts that will work for you, that will be helpful for you, okay, in your process to be a trader. Okay, so let me encourage you again to subscribe to my channel and like this video, because I'm going to be sharing some other more crazy topics, right, that will be really helpful for you. I'm really sure about that. Let me show you here the results of my trading strategy. I have an automated trading strategy that I use, and this trading strategy made over $21,000 for the past month, from July 1st all the way to July 29th. So these are the results using my trading strategy, a profit factor of 3.46, which is good. Actually, it's pretty good. In general, my trading strategy is between 3 and 4 of a profit factor. Okay, so that's really good for an automated trading strategy. I don't know if you have done some research about automated trading strategy. The profit factor is usually between 2 and 2.5 for a really good trading strategy, right? For a really good automated trading strategy. But using my automated trading strategy, I managed to have way better results. Okay, so these are my results. I use 6 contracts, right, with this trading strategy. I've been sharing with you some of the concepts that I used to develop this trading strategy, right? It's based on probabilistic concepts. Okay, I have a mentoring program with this trading strategy. If you are interested, just feel free to contact me via WhatsApp or email. I'm going to leave you a link in the description of this video that will take you directly to my WhatsApp, so you can talk to me directly, right, using that link over there. So feel free to do that. I teach a whole lot of really nice concepts about my trading strategy, so feel free to do that. I think it's pretty affordable for most people, right? I have set a price that is really good for the majority of people, because the idea here is to help you out with your process. Okay, if you want to become a trader and live your life as a trader, you're in the right place. I have developed this trading program, this mentoring program, to help you all. Okay, so feel free to contact me there, and I'm going to be really happy to give you all the information you need, right, and to answer all of your questions that you may have. For those of you who don't know me, actually, my name is David Acosta. I've actually been sharing this trading strategy with other Latin American traders and with other European traders as well, for the Spanish section, of course, right? The idea here now is to share my trading strategy with the English section, right, with the English speaking countries. So yeah, my name is David Acosta. I've been a trader for over 6 years now. Actually, during the first 2 years, I invested in some academies and trading rooms to prepare myself, right, academically, to be a profitable trader. And during that time, I developed my trading strategy that is based on really cool concepts about probabilistic approaches. So yeah, that's my story. I am an electronic engineer, so this is why I basically like to code things, crazy stuff, right, NinjaTrader and other platforms as well. So that's basically me. And I hope you enjoyed this video. I encourage you to stay until the end of this video to learn all the concepts that I have to share with you today. So let's begin with this video. Okay guys, let me show you here this table that I have here. This concept that I'm going to be sharing with you is probability to extend, right? And it's about what are the probabilities of breaking out certain levels, right, during the day, right, or during the session. Okay, so let me explain to you what these columns mean. The idea here is you see here A, B, it means that the market opens at 7:30 in my local time. So we're gonna call from 7:30 all the way to 8 a.m. We're gonna call that period A period. So we have here A period. Okay, now from 8 to 8:30 a.m. we're gonna call that B period. Okay, so that's B. This is C period. Okay, and this is D period, and so on. Okay, so this is E and etc. Okay, so in this table, A to V means these two periods, right? From period A to period B. And here we have A to Z. It means A, B, and Z. Okay, so let's take a look at AV period. It says that AV period has a probability to break of 98%. So what does that mean? We're going to draw a rectangle here that will take into account those two periods. Okay, so the high of all these two periods is this one, and the low is this one. So this is the size of the of this rectangle. Okay, and now what does 98% mean? It means that we have a 98% chance to break this level here or this level here, any of both. 98% to break. Okay, and you can see that the market did it over here. Now let's take a look at the market structure, right? It's kind of lateral here, right? The market is kind of complicated during this period, but as you can see, the market ended this two period, right, at 8:20, at 8:30 a.m. the market ended over here. So it is more likely to break in this section, right? Of course, it is more likely to break the high of these two periods than here. It's harder for the market to go all over here and come back all the way here and break it to the downside, right? I'm not saying it's impossible, but it's more likely to break it over here, right? So from this moment, you know that the market has a great probability to continue up, right? Why? Because you have a 98% chance to break this level, right, or this level, but we've said that it's more likely to break this level, right, than this level over here. So it's going to break it here at 98%. Okay, now the question is how much the market is going to continue. The answer is here, right? It says that once these two periods are broken, it has a 50% of range remaining, right? So if the market has a range from A to B of about 8.75 points, so this table is saying that if we have at least 8 more points to go up or down, right? So the market during the day can range from this level all the way to this level, or from this level all the way down here, 8.75 points from here to the downside, right? But it's more likely to do it over here to the upside, right? And I'm just saying these are average ranges, right, of the day. As you can see, the market actually expanded even more, okay, way more, as you can see here. It's just an approach, right? It's just an approximation. That's the way you read this table, right? Let's take a look at A to Z. It says we have a 93% to break the high or the low of the period from A to Z. So let's adjust this new rectangle. So the high of this period was here and the low of this period was here. Now let me ask you again, where is more likely the market to break this period? Right in this section or in this section? At this level or at this level? Of course at this level, right? And there is a 93% to break it. Okay, why? Because it's harder for the market to go all the way up and then go the way down over here, right, and break it in this level. That is what I call common sense, right? You look at this market structure here and you can think that way, right? So we have a 93% chance to break this level, that the market does it right here. Now, by how much the market is going to continue? According to the table, 44% of range remains. So it means this from here all the way here was 56% of the range, of the average range, right, of the day. So we have another 44% going up, most likely. Okay, I know this part is a little bit confusing, but I'm going to explain to you that in another video, right, because I don't want this video to be too extended. Okay, so this is the concept, and you can apply that from A to D, from A to E, and etc. Okay, and as you can see, these probabilities are actually going down as the time goes on, right, as we continue into the session, right? So that is why most people say that the better times to trade are in the mornings, right, at the opening session, because you have the statistics over here, because the market is a little bit more predictable during these times of the session. Okay, now where does this table come from? It comes from a large probability or statistical analysis of one entire year, right? So I coded a program that will calculate and will tell me of all A/B periods of the entire year, how many of them were broken, right? And 98% of them were broken every single day. And once it's broken, how much range remains? Well, 50% average, right? These are average percentages. Okay, so that's how I got this data, and that is really helpful. Now, how can you use this, right? Let me explain to you a little bit about that. This is more for manual strategies, right? I use an automated trading strategy, and I don't have to worry about these things. But for those of you who use a manual strategy, this could be a cool concept. Let's take a look at these 3 periods. Right, you have a probability or a chance to break this level of 93%, right? Once you take a look at the market structure here, you know that is going to be more likely to break up, right, to the upside. So once the market ends here, you know that the market is more likely to continue up. So at this time, you're going to be more likely taking longs, right? You don't want to be in the short side here, believe me. And you can see the market actually did that, right? It came to the upside because we have all that information, right? We have all that information. You can start to take longs here, right? And once the range is not extending anymore, you can stop trading or wait until you have a more clear picture of what could be happening. But that's the idea, right? That's the idea behind this concept, and that's how you can use it for trading, for manual trading. Okay. So yes, guys, let me know what do you think about this concept here that I have for you today. In the next video, I'm going to explain to you how to calculate this remaining range. It's just a simple rule, right? Just a simple calculation, but I'm going to teach you how to calculate that a little bit more in detail. Okay, let me remind you that I have a mentoring program, and with my trading strategy, if you are interested in my mentoring program, feel free to contact me via WhatsApp, right? I'm going to leave you a link in the description below for you to contact me via WhatsApp, or you can send me an email if you want. Feel free to do that, and I hope these concepts that I'm sharing with you are helpful for you. Let me know that in the comments, and feel free to subscribe to my channel. Feel free to like this video, and I hope you learned something new, something valuable today. And I really appreciate your time, guys, and see you in the next video.